have with us Mr. Jasbir Singh joining in on the show, the Chief Executive Officer as well as the Chairman, to talk to us about this latest development. Hi, Mr. Singh. Good to be speaking with you. That's exactly the first question. You have been talking about how you're looking at expanding into other categories as well beyond the room ACs, and it seems to be happening. Talk to me about what kind of potential do you see in this entire railway segment, because there's a complete overhaul which is happening of the railway coaches back home. So how big an opportunity could it be for you?
So good morning and thank you for having me on the show. We are very excited for this new announcement with Titagarh. We see it as a very win-win situation. So it has got three components to it. First of all, since Sidwal, our railway mobility application business, we are delivering solutions in space of air conditioners, doors, gangways, and pantry systems. So we will be creating another SPV with Titagarh, where we are going to bring interiors and other components, which for us will increase a very big TAM. Now, looking into the kind of announcements Railway Ministry has done and Urban Development Ministry has done for the metro coaches, we expect this total addressable market to go to almost about 75 to 80,000 crore for the kind of order book which is coming. So in next 5 to 6 years time. So we expect that, Sidwal, our subsidiary of railway application, can multifold grow on this venture with Titagarh, where we will be creating a complete, comprehensive and integrated solutions for the complete rolling stock manufacturers, giving them complete integrated solutions in terms of almost 25 to 30% of what goes into a passenger coach.
This can be quite meaningful. I was already observing that you had moved towards railways before this particular tie-up was also announced by HVAC, the heavy air conditioning side. So it appears that railway opportunity in layers, in various segments, could become a very big opportunity for you. The new Titagarh is, of course, a wagon side, and you're talking about the parts to it. We already saw HVAC. Can you throw us a big picture in the next 3 to 4 years how railway could become a part of your overall business?
See, today we entered into railway business in 2019 by acquiring Sidwal. And first of all, we started re-layouting our factories and getting it ready for the metro coaches as well as for the complete air-conditioned coaches. Today, we have a dominant share in the metro space as well as in the railway air-conditioned coaches. But then to increase our wallet share within the existing customers, we thought of a strategy where we can leverage our group strength and also give a complete comprehensive solutions in the complete railway coaches business. Now, if you see the announcements made by Ministry of Railways, almost 3,000 new Vande Bharat Express are going to be launched, and one Vande Bharat Express is having 16 coaches, and we want to address almost about 2 to 2.5 crore per coach as a bill of material solution provider, giving solution not only for air conditioners but for other equipment which rolling stock manufacturer buys from outside, like doors and gangways, pantry systems, gears, couplers, interiors, toilets and seats, etc. So we are forging some more alliances in this SPV to bring a complete ecosystem of the consolidator solution provider in this railway business.
You said 2.5 crore is what you're targeting per coach, and the total addressable market is 70 to 80,000 crore if I had it right. But what part of the market share are you expecting to win? Because it's also getting a bit heated in terms of this entire cooling segment, right? You had a lot of MNCs already doing this work. What's the USP that you bring to the table then? Is it lower margins at all, or what kind of margins are you expecting on this?
So we have in Sidwal, we have 20% EBITDA margins currently and almost 40% of return on capital employed in that business. It is a very good business with very high entry barriers. And similarly, we have chosen the products which are very high entry barrier products, where the gestation period is almost about 5 to 6 years. That is what we have chosen to be in. We are bringing in more parts to be supplied to the rolling stock manufacturer. And since we are very large in static application of air conditioners, that's why we get the purchase leverage, and having 29 plants, we get the geographical advantage also to supply to our customers.
Can you give us a sense then as to your intentions as well of diversifying away from only AC, as to what exactly you would be looking at? How much of a potential benefit would that be from the company? What would the overall mix look like?
Well, for Sidwal, if I talk about, we are sitting at an order book of almost about 1100 crores. So that we expect this to double with this announcement because Titagarh already has 80 trains Vande Bharat coaches order in hand, and we will be supplying air conditioners plus all the Sidwal products to for their Vande Bharat requirements and also for their metro coach requirement because they have order book for Pune Metro, for Ahmedabad and Surat Metro. And of course, for us, this is one of the strategic tie-up where uh, the Titagarh have their facility in Italy also. So till now, we were not having experience in the global play. We were lacking in the experience. So this venture with Titagarh will also give us a global play where we will be supplying air conditioners and other products in Italy also. And that's how we will become eligible for global tenders going forward.
Clearly, the market and the street is really loving your diversification strategy because you are going in a very calibrated manner. Uh, your acquisition of PCB, that is also something which people really liked on the street as a part of your overall diversification. How is that progressing, and some color on what shape it can take going forward in terms of opportunity?
We entered into electronics in 2018 by acquiring Ilgin because at that time air conditioner industry was traveling from fixed speed to inverter AC, and in inverter AC the largest contributor of bill of material is the PCB board. We were not having at that time, so we acquired majority stake in Ilgin, and that's how it started growing. But eventually, after achieving our objective of supplying to the industry, we saw that we can get into the adjacent markets, and we started expanding into hearable wearables. We started expanding into telecom, into auto space. Now we tracked the smart meters. And what we saw was that PCB assembly, 80% of the components, whether active or passive, is getting imported. And looking into the Atmanirbhar Bharat campaign and agenda of our Honorable Prime Minister, we thought that we should get into backward integration. And that's how we acquired Ascent Circuits, which is the bare PCB board manufacturer. And we have also done an MOU with Korea Circuit recently, which is one of the leading player in the bare PCB board category, supplying to semiconductor industry and also to mobile industry. So they will be also participating with us, and we will create the whole ecosystem of passive component, especially in the bare PCB board and PCB assemblies in various applications. So we see a multi-fold growth coming in the electronic sector. And I think that is purely becoming number 2.0 business strategy for us.
So multifold increase in the electronics business. You're saying the share of railways is expected to double, and you talked about how margins for this particular JV is 20% with ROCEs of around 40%. If I have it right, your blended margins right now is around 7% with ROCEs being below 20%, actually 9%, single digit. What will the total blended rate look like now, given the additional businesses coming at a very lucrative number in terms of margins and ROCEs?
So we've already guided the markets. Last year we've touched almost 14.5, 15% of ROCEs, and in next 3 years' time we should be in the range of 19 to 21% of ROCE on a consolidated basis.
The margins on a consolidated basis then?
Well, we are improving the margins. Very difficult to comment right now because margins in percentage terms are functions of commodity as well as the sub-assemblies which we do. But there will be some margin expansion also on the consolidated balance.
About the top line itself, this entire EMS industry has been growing at a CAGR of almost 35-40%. What do you envisage for yourself? What could be the growth for you? A long-term number, let's say next 3 years. What would be the CAGR growth that we should expect given the diversification that you're doing into newer segments?
See, if I talk about the three divisions, the railway division anyway, we are looking to a multifold growth from where we are today. As per after this joint venture we have just announced, I think we expect that in next 5 years' time, Sidwal has a potential to go at least 3 to 4 times of what it is. And plus, we are creating another ecosystem which will be almost as parallel to Sidwal in a 50-50 JV. On electronics, of course, there's a lot of potential. Now, since we are into bare PCB board, we shall be attempting our exports also. not only India market, and we are also excited by the multifold growth there. We expect that it will be in line to the EMS projections, what it is there. Since we have added smart meters, we have added telecom businesses, we also expect a good chunk of growth coming in from that sector. So overall, I think we are excited that all the three divisions now in 5 years' time have multi-billion-dollar opportunities coming on the table for next decade, and that's what we want to leverage on.
Sorry, I just wanted to scratch that point further on the smart meters, because that's something that you're saying could be a multifold opportunity, as is others. A word on that, and also with respect to the budget impending, is there something specific you're expecting for the EMS industry, or a lot has been done through those PLIs already?
No, I think government has done fairly great work, I would say, and thanks to all the initiatives of whether it is MSIPs, PLI, specs, government has given so many incentives, and state governments are giving further incentives. So it is right time for entrepreneurs in India to take bold and brave steps and leverage the consumption potential of India. For the budget point of view, I don't think so that there is anything pending. Only the phased manufacturing program implementability, which was recommended to government 2 years back, we expect that that is in line. So as there will be some custom duty increases in the compressor side, now we see almost 5 companies coming in India and putting up compressor plants. So is the case we are expecting in the motors business also. So that's all our expectation from budget.
Before I let you go, I sense a lot of high growth potential in all your businesses, including the legacy as well as the future businesses. I want to understand what is the capital intensity of these businesses? Would you be requiring to inject fresh capital? Are you adequately capitalized right now? What will the capital requirement be? And would there be a need for a small bridge capital raising in the interim?
You see today for our air conditioner business, component business, we've already done with capex. So that business doesn't require any much capex now moving forward for at least 3-4 years. We will be doing some capex in the bare PCB board segment, as well as a new facility which is being set up in Sidwal. But it will not be large because asset turns are very good there. In electronics, we have asset turns of almost 10 to 11. And in railway application, asset turns are further more. So not a very big capex which is coming in. But in case, some inorganic growth story comes in further, then we'll think about it. But at the moment, we are not thinking about raising capital.
We'll let you go on that one. Thanks so much for joining us and giving us the roadmap, the new businesses which are lined up at Amber Enterprises. Well, look at the last